Well, the U.S. P&C insurance market is currently experiencing a hard reinsurance market that started last year, and it was a result of record inflation. In particular, we saw 20% inflation on construction labor, 15% inflation on construction materials. Uh, that combined with increased storm frequency and severity meant that claims expenses were much higher than projected. And that combined with poor stock market results impacted the profitability of P&C insurers in 2022 and going forward into 23. The hard reinsurance market that began last year has continued into this year and is projected to last at least another 18 to potentially 36 months, depending on how the market responds and storm activity. But that hard reinsurance market has caused a hard homeowners insurance market in the United States, primarily personal lines, and homeowners is the hardest hit. And availability and affordability have become issues for homeowners insurance. We've seen in Florida, California, and Louisiana, companies exiting the marketplace in states like Florida and Louisiana. And in California, we've seen moratorium on homeowners from large insurers there as they seek to improve underwriting results. But now those moratoriums have found their way to the Midwest. We have heard there are as many as 22 insurers in the Midwest currently with moratoriums on homeowners insurance one way or another, either direct moratoriums or significant tightening of their underwriting to decrease the flow of new business into the company. We're also seeing the tightening of the underwriting in terms of double-digit increases in premiums among many carriers, increases in deductibles, particularly storm deductibles. We're seeing $2,500 wind hail deductibles being added to policies, and in some cases, there's been a movement towards percentage deductibles, which have existed in terms of hurricane deductibles, on the Gulf Coast and the East Coast for many years, but now we're starting to see those being applied far more liberally in the Midwest in response to increased storm activity. And then finally, other restrictions in coverage, including actual cash value restrictions on roofs after a certain age. Cosmetic damage exclusions are being used more and more often and applied more and more often. And we expect those changes in underwriting to continue well into the next year to 2 years. Well, the Wisconsin market, like the rest of the country in terms of P&C, we have the same issues with increasing storms frequency and severity here. But in Wisconsin, we have a unique issue. The largest reinsurer for town mutuals in Wisconsin is Wisconsin Reinsurance Corporation. And in June, they were formally placed into rehabilitation by the Office of the Commissioner of Insurance. The company had suffered 5 years of continuing underwriting losses and lost a surplus. And 2022 was a real pivotal year in terms of those underwriting losses for WRC. And WRC being the largest reinsurer, there were still two other reinsurers in the state, Guy Carpenter and Grinnell Re. Those two companies still write in the state and still provide reinsurance to town mutual insurers here. But they only had a small percentage of the market. One of the issues that we've run into is the requirement in Wisconsin for unlimited aggregate reinsurance. My understanding that there are at least 3 to 4 other states that have that requirement, statutory requirement or regulatory requirement for unlimited aggregate reinsurance. And that became a significant issue here. Grinnell and Guy Carpenter both told their existing clients that they would still be able to offer them unlimited aggregate reinsurance, but they would not be able to write any new unlimited aggregate reinsurance contracts for potential new clients in Wisconsin going forward. Thankfully, the Office of the Commissioner of Insurance, seeing what was happening in the marketplace, issued some new guidance, easing some of the restrictions on limited aggregate reinsurance requirements. They are allowing town mutuals with sufficient surplus to convert to domestic mutuals, and then waiving the requirement for those domestic mutuals to have unlimited aggregate reinsurance. The internal guideline at OCI has been that if you have less than 10 million of surplus, you are required to have unlimited aggregate reinsurance. But the new guidance allows companies that are domestics with less than 10 million to have a limited ag contract, which Guy Carpenter has said that they are able to write some limited ag contracts in Wisconsin. So that has freed up some of our members that are able to take advantage of those eased restrictions to convert and get those limited ag contracts. And we're also seeing some potential merger activity where 2, 3, or even 4 companies are looking to merge to get to the surplus requirements and get enough premium to be an attractive client for Guy Carpenter. And we also have some new reinsurance options in Wisconsin. Mutual Underwriters is a new company that came into Wisconsin last year and has recently been able to provide indications to town mutual reinsurers and provide reinsurance to them. And so that's been very helpful. We understand that they are currently very actively working with many of our members to try to get them a reinsurance program and keep them in compliance for going into 2024. We've also worked with Somerset Reinsurance Brokers. They've been a longtime member of WAMIC, and they're working to get licensed in Wisconsin. My understanding is they are close, if not already licensed, in which case they may be able to offer some reinsurance options for some of the domestic mutuals as well. Yeah, so WAMIC this year, we kind of saw what was coming along and began discussions in February to see if we could develop a solution for our membership. And we had discussions with Somerset Reinsurance Brokers and worked with them to develop a reinsurance pool plan that we were able to present in May to the Office of the Commissioner of Insurance. Unfortunately, we were unable to overcome some statutory and regulatory obstacles to obtain the required approval for such a structure to operate in Wisconsin, so that didn't go forward. And time was really the enemy there. If we had maybe more time, if we had been able to start working on it perhaps in the fall, maybe it would have come to fruition in time. But that didn't happen, and unfortunately, we weren't able to do that. But we did work towards something like that. We've also been partnering with NAMIC, our national association, the Wisconsin Insurance Alliance, and the Cooperative Network to help address statutory and regulatory burdens with the commissioner's office. And I had a very productive meeting with the commissioner and his staff late this summer. And the results of that meeting were to get clarification on the new guidance that they issued, on the timelines that they anticipated and what they expected from our members. And we were able to take that information back to our members. And so that kind of rolls into the constant communication that we've had with our members this year as market conditions have continued to rapidly shift. Constant phone calls to individual members and communication with the entire group to give them as much information as we could to help them make responsible decisions for the future of their company. We've been working with the reinsurers to explore solutions and options for our members. We partnered with Vertifor and Mutual Capital Analytics to provide an industry report to help our members benchmark their current premiums as part of their overall underwriting strategy using Wisconsin quoting data from 2022. And as always, we provided operational support for our members and continue to provide operational support for members with regard to mergers, affiliations, and conversions to domestic status. Well, so this coming WAMIC convention, I'm very excited about. It really is a pivotal convention for us. We're aware of several mergers that are potentially happening in Wisconsin, and the result is that this might be the last convention for some of our members as they merge into other companies, and their companies cease to exist, which is a sad thing. But our convention is always about celebrating the industry, and we're still happy to do that. And it's an opportunity for our members to get together as a group and compare notes and talk about what's going to happen in 2024 and beyond for the industry. And so we're excited for those opportunities. Our registration is well beyond last year's registration, which is a sign that our members want to get together and have those conversations with each other. I'm excited for our keynote speaker. As Ben Leibel of Quick Trip is coming to keynote our convention. For those that aren't familiar, Quick Trip is an amazing convenience store gas station chain that operates in Wisconsin, Iowa, and I believe Minnesota. And it really goes beyond just a normal convenience store or gas station. And if anybody that's a road warrior in Wisconsin knows, Quick Trip is kind of an oasis on your travels throughout the state. We're excited to welcome WAMIC Chair Jake Black. We're going to do an interview with him on Monday afternoon. And we're excited to welcome the new AAIS CEO, Werner Kruk, who is going to lead some CEO roundtables for us with our executives, which, again, given the situation, those roundtables are going to be very important, not just this year, but, for the future, and for our CEOs to be able to talk about plans for 24 and beyond for their companies and for the industry.